this month's webinar, and it's going to be throughout the quarter, is we're just going to talk about how you can go deeper in the investment community. And what a better product to go deeper in the investment community than DSCR products. So DSCR done right. What's new in SmartVest and what it means for investor qualification. So do want to call out, you guys should see at the bottom both Q&A and chat. If you can drop all of your questions in Q&A, we're going to have a great team of people on this webinar that can answer your questions. So let's jump to the next slide and share with you some of the people that we have on the call. So my name is Don Chiesa. I'm the division manager, vice president here at Newrez. I cover not only all of our West Coast, but all of our DSCR product. Joining me is Sherry Boucher. She is one of our top AEs when it comes to non-QM. Her partners probably send the most non-QM business. And so she has a great real life perspective on what partners are sending us when it comes to and why, especially on the DSCR product. And then lastly, you see Jevon Stafiri. He is the VP of underwriting, but he also oversees all thing non-QM. He'll be answering things in the chat. He's got a wealth of experience. I think he's been doing this longer than anybody. I sat down with him recently and we were chatting. I think he's been underwriting non-QM just here at Newrez since like 2018. So when we talk about non-QM, I think a lot of people talk about it as a recent thing. Jevon has a ton of experience in the business and been doing it right here for a long time. So I do want to jump into what we're going to chat about today, and we're changing up a little bit. We want to make sure that everybody understands why this product is such a huge opportunity in the marketplace. And so year over year growth in the investment community side has just been huge. It's been double digits, 2024 above 50% again in 2025. That 314% is just us looking at our own internal growth because we saw this as such a huge opportunity and started focusing on it. And that's the kind of results that you as a company can get just by focusing on it as well. As we had 314% year over year growth. It's super popular because it offers the fastest approval and the most flexible structure out there, right? DSCR loans are just being figured out on rental income and cash flow, not borrowers, DTI, et cetera. It's true cash flow on the property, and we'll get into more of that in a second. And there's just some strong rental trends out there. 68% of investors surveyed planned that they were going to buy one more investment property in 2026. So what is that 68% of investors and how is it driving the market? Well, if you go out to a company and you can search the web, there's a company out there that's called Cotality, and they do a lot of data and statistics, and some of their information's public. They write articles all the time. But if you look at the investor community's role in purchase business, they're now over 30% of the market. So literally over 30% of the market in the purchase side of the market is being done by investors. And by the way, I'll throw out there, don't worry a great deal about some of the stuff that the current administration is doing as far as shutting down investor products, because they're talking about investors that are probably greater than 1,000 homes owned. When I'm talking about investors, like 70% of the market owns under 10, 85+% own under 100. Under 1,000 is like 95% plus of the market. And so really when the administration starts talking about not allowing investors, they're talking large investors over 1,000 per. So again, that's a little bit of just the opportunity, but there's even more to the opportunity. We look at 2026 and ask ourselves the question, is it really the year of the reset? So people think of reset. And when they think of reset, it's just around rates dropping. And, we hope that rates go down. If we all had a crystal ball, we'd all probably be multimillionaires, but we don't. But there's more to that in the non-QM space, especially in DSCR, because while it continues to be a very resilient product, when you look back at the years of 2024 and 2025, that product was getting kicked off again. And so there were higher rates in the market when you look at them. If you just even look at some of the rates from a T bond standpoint, in 2024 and 2025, you had rates that are the 10-year treasury was sitting at around 4.5%. It's much further dropped since then. And in addition to that, we've seen a lot of changes to guidelines, even ourselves, right? A lot of times you were seeing 1.1 or higher within your debt service coverage ratios. Now, there's investors like ourselves that'll go all the way down to 0.5%. They know that you're a seasoned investor, and with the right LTV, we're still willing to make the loan below a 1% DSCR. And then we continue to think that there'll be shifts in 2026, not only rate movement, but there's constant new entrants into the marketplace, and then those going to be constant iterations within guidelines. And so I just think it's a great year. If you're thinking about getting into other products, the one stat that I'll throw out again is if a third of the purchase market is being done by investors, you want to at least be trying to look at how investors are getting their financing. And this is super easy because, again, if you own multiple properties, not having to get fully qualified on DSCR or on your debt ratios and looking just strictly at the ratio of your cash flow on that individual property is a huge win. So we're going to jump into it a little bit more and ensure that you're prepared to take advantage of this kind of market. So let's slow down because I assume we have seasoned people on the phone, but we probably have some people on the phone that just like, what is a DSCR? So for those that aren't familiar with the product, right, it's debt service coverage ratio. And so that's simple math, right? What's the monthly rental income you're receiving on the property divided by your monthly PITI, and it comes up with a coverage ratio. For a long time, that ratio, they wanted to have a higher cash flow on the property than the monthly payment. And so a lot of the things as I was sharing with you earlier would have to be above one, right? The 1.25 shown here. But there are numbers and ways you can qualify this product at lower numbers and have a very, we say there's always a way to get the loan done with the right down payment or ensuring that you're looking at, short-term rentals, long-term rentals. And so we want to jump into what that looks like, but wanted to make sure everybody understands what the calculations look like. And that's as easy as it is, right? You're not having to get a bunch of tax returns, et cetera. So kind of jumping forward and reiterating some of that, that's why this product is so powerful. On the left-hand side, you see no tax returns, no W-2s and pay stubs for businesses, right? A lot of these are done in LLCs, no business financials. Um, Again, no asset depletion to try to get a debt ratio to work. It's truly cash flow. And then on the cash flow side, it's long-term or short-term rentals. And with short-term, we think that we, have a huge win here. We're able to help you qualify very simply without even having an appraisal done on the property. We have something that we'll go in deeper on later in the presentation, but with as little as 20% down with the 720 FICO, we can pull an air DNA for you on a property. And you can understand whether or not that property cash flows and what LTV and whether or not you're going to be able to get that deal done before you even put a loan package in, right? Reach out to your AE. They can help you pull down this Air DNA product that we're going to talk about more in a second. So we're going to jump into it. Sherry, I know we've been chatting a lot about eligibility and guidelines. And so, I'll give a quick summary here, right? We do it on both US citizens, permanent residents. We'll even talk about some foreign nationals at the end. But we're looking for a seasoned landlord, like 1+ year landlord history, minimum FICO score of 660. We will allow first-time investors, and I want to make sure you guys understand when I say first-time investors. That's not a first-time home buyer. That's a first-time investor, somebody buying investment properties. We'll even go down to a 680 FICO score there. Again, we're doing both purchases and refinances. I know, Sherry, we see a lot of not only on the refinance side, but you're telling me that a lot of people are using cash out and maybe they're buying new homes. But I don't know if you have any commentary there on just some of the ways people are using some of the funds.
Yes, actually, for Cash out refis, I feel are really picking up right now. And especially, I was having a conversation with one of my brokers just about the opportunity. There's so many people during COVID that were going and getting HELOCs or taking cash out from them or second mortgages. So I think there's a huge opportunity right now with for our cash out. And one thing I always try to, really get into stronger detail with my clients is when you're looking at cash out, a lot of times make sure you are letting your AE know like exactly like what is the transaction. You want to make sure, is this somebody that just purchased the property within, 6 months? And when I say within 6 months, this is for us like from inception, note date to note date. So you would have to close that transaction with us, but that would put you into what we call like the delayed financing, which, similar to how you would do it with, the agencies doing a conventional. What's a little unique about us with the delayed financing is that you're able to price it. And I think this is where we have like such an edge out there. You're pricing these as rate and term, and you're also, and don't I'm going to be specific on this one. So the appraised value is can be used, but remember your actual what you purchased that property for. So if you bought a property for 300,000, that's your cap, what you're going to get out in that transaction. So you can't ask to, use a higher value and get more cash out than that. But that is a great opportunity for cash sales. And I can't even tell you how many transactions people register wrong or they price them wrong, and then we end up showing them the pricing, and they're just it's an amazing opportunity there. And then to couple that with just our regular cash out, if you have somebody that has had a property for over the 6 months and they just want to do traditional cash out refinancing, then you'll just be looking at our 6 month seasoning rule, and you would price that as a cash out. And, for that, we have, all different types of, LTVs, max cash out. Obviously, it's a business purpose loan, so we have to, um, stay within there if you're paying anything off. But that is, I
Yeah.
feel the cash out right now is our super big opportunities we have.
And we said it earlier, right? We know that 68% of the investors in the market are going to buy another investment sometime in 2026. And so they're getting the money from somewhere. They either have cash laying around or they're cashing out one of their other properties. And, they want to keep it easy because they own multiple properties. So they're going to frequently use the DSCR product. And as we're showing you on our LTV and guidelines, right, we can go up to 85 if they have a long-term rental. But again, short-term rentals are hot right now, and we'll chat a little bit later about where you can source these short-term rentals. Well, we go up to 80% on those. And um, as long as the LTV is 80% and below, and we're going to chat about that on this next slide, is we will go 100% with gift of funds as long as it's 80% or below. And I'll pause real quick because when we start talking about funds to close, if you guys haven't seen our recent announcement, we rolled out a whole product line on crypto. So we allow for to use crypto for down payment on our DSCRs. And we don't require that you cash that out. We have a whole calculation where we will take your different coin bases as long as it's one that's traded on a public exchange. So reach out to your AE, figure out which exchanges we use, and we'll allow for a 50% haircut without ever having to cash that out as long as they have a 20% cushion on the amount of funds they need to close. We think it's big. Like if you think about crypto right now and the recent drop, we don't, if you're a believer in crypto, you don't believe it's going to stay low. You know it's going to go back up. So why would you want to cash out your crypto? And you don't want to be on the sidelines right now because investors, the whole reason why there's such a high percentage of investors in the market right now, they know that there's good deals out there, right? When rates are high, all they're worried about is does my home cash flow? Because they know the values are lower. If rates start to drop, they know values are going to go up. So they're trying to take advantage of opportunities in the market right now. And they want to be able to do that. And if they're using crypto, we don't require you to cash it out. So reach out to your AE, understand how you can use crypto on our DSCR product. But let me come back to some of the other eligibility I was talking about funds to close. We allow for, um, as I shared with you down below, gifts are allowed for down payment, closing costs, as long as your LTV is 80% or less. We're going to allow for 100% of the closing costs to be a gift. If you don't have those assets, if you don't have that crypto, that's also not only the down payment, but closing costs and reserves. 100% of that can come from a gift. So there's a way to get the deal done, is what I'm basically stating. Walking through some of the other ones, and I'll pause on this second bullet up there, but we allow for non-warrantable condos on our product. We allow for non-warrantable condos, condo tells. It's a big deal in the marketplace right now. SFRs and 2 to 4 units are allowed, but just don't pass up that opportunity to reach out to us, because we will do a pre-flight on your condos and look at your condo guidelines. So again, you'll hear me repeat this over and over again. Reach out to your AE, have them pre-flight a condo for you, determine whether or not it's non-warrantable and if it qualifies for our guidelines. But that last one is, we made it standard in our guidelines for our non-QM that ADUs are allowed. We, look at our guidelines, but they more or less follow Freddie's guides for one additional ADU. And I know you're seeing a lot of that in the marketplace. I don't know if you want to kind of comment a little bit on how frequently you're seeing that, because I know out in California, where I'm from, everybody and their brother's putting an ADU to try to generate additional revenue, Sherry. So you seeing the same thing in the Northeast?
Yes, we are full of ADUs in the Northeast, so this is a tremendous add-on. Devin got us approved for this past year, and and that's another thing when we browse into, I think the next slide after, we'll talk a little bit more about the short-term rentals, and I can dig into that a little bit.
Perfect.
But the ADUs are definitely going to add extra income, so we can't just be looking at AirDNA report because a lot of times they won't know about that. So we can
Okay.
dive into
Why
that.
don't we put a pin in that and chat a little bit more? Because I know there's some great things to know about ADUs and short-term rentals, but I don't want to miss a couple of these valuable points here. And you can comment on them as well. But the two that are huge is, we allow for LLC vesting, right? A lot of these investors are coming in and wanting to dump it under an LLC because they own multiple properties. We do require 51% ownership within the LLC to be on the loan. One of the things that I think are super important when we're chatting with our partners out there is, they want to know whether or not we're reporting performing LLCs to the bureaus. And so if they're closing in an LLC, we will not report performing loans, only if they go delinquent. And that's huge for these investors because, right, they have multiple properties and they want to be able to refinance their primary home as well. And they're holding these other properties out there in LLCs. And so we are great to announce that we don't report as long as it's closed in an LLC and the loan is performing. So big news there. And then the other one, just from a qualifying standpoint, is on our DSCRs, we have an IO product, but the best thing about our IO is that we use it within qualifying the cash flow on the property. And so it's a big deal. Like, you're sitting at 98, 95, and that's an LTV haircut, as we showed you on the last slide, right? If you have to drop below a 1.0 debt service coverage ratio, your LTV gets cut 10%, and you don't sometimes want to bring in those additional funds. So, sure, I know you deal with a lot of partners out there. Are they using that IO feature to ensure that they qualify for more home?
Absolutely. I think our IO is probably, it's such a, a deal saver. I mean, coupled with, especially if we talk into purchases and the air DNA, but the interest only, it saves, you can, restructure almost any file, especially if you're just short of it. We check with our capital markets, and the add-ons are, they're very conservative. So the pricing hits aren't, usually it's like a quarter, depending on, LTV, CLTV, but definitely we have a 30-year and 40-year IO. And I think what's special about ours is, it's a true, fixed, fully amortized. So your interest only period, of course, will always be the 10 years. But after that, it just takes a little bit of that, risk, or people get a little scared sometimes when they're getting pitched, interest only arms. So these are nice. They're competitively priced, and it's, they're amortized after the 10. You would, if they never touched their loan, they would be out on additional 20 or an additional 30 if they did a 40. But it really does, yeah, it saves so many. DSCR loans, just adding that feature because we're using the principal instead of the principal and interest payment. What's going into the loan is you'll see the IO payment, and of course you have to add the rest of your PITIA in there.
And that's all the investor wants. They want to ensure that the property is cash flowing. And so if they can do that with an IO payment, great. And by the way, if rents raise or whatever, you're not ever obligated to make the IO only payment. You can always make a greater payment and apply it to principal. This is truly to ensure that, got a vacancy, or I just want to ensure that my property cash flows, or I don't want to bring in the additional 10%. So we just think that's a great feature that we don't want people to forget about. We also allow for, and we've recently increased this, so we allow for 6% interested party contribution. So if you have a seller that is motivated, a lot of other companies are capping you at 3%. We will allow you to go all the way up since it's an investment property. That's the reason why they cap. We go all the way up to 6%. So that's a win. I do like to call it that second to last bullet. We currently require you to be licensed in the state that you're trying to close the loan. We know business purpose loans and some states allow you to be more flexible, but as of today, we require you, and I want to make sure that we're calling that out, that you must be licensed in the state that you're doing the DSCR with us. Alrighty, so moving on to the next slide. We're going to talk a little bit more around the income qualifications. And so we keep referencing short-term and long-term rentals, right? There are differences in LTV. And this is one share that I would love for you to kind of dive into because you do this a lot with your partners and how you leverage the Air DNA report. Talk about the confidence level that needs to come back. Talk about how it's just we pull it in minutes. And then once you give it to your partner, how to do the calculation and why you're seeing such a high level of interest in that product.
Great. Thank you. Yeah, so the Air DNA, I would probably say, has been, such a huge thing for Newrez. I mean, I feel we do it right. I don't think anybody executes the way, that we do. Just to go over a few highlights and the things that I like to talk about is when first thing is the first question always is, well, we have this report, but what about how do we order the appraisal, right? So always a great question. So you're just always ordering an appraisal as you would any normal loan. So it's really going to come in as like, long-term rents, right? Even though you're doing the short-term rental, you would be pricing out your loan, registering your loan, it's called the STR, product in our DSCR Smart Vest. But with that being said, we're going to, pull and run these AirDNA reports for you first. If you are kind enough to give us the address, always be careful because realtors a lot of times can go online and they can start putting, the property has 15 bedrooms and they're adding stuff, that's not real GLA. They're putting stuff in basements or in floors where there's no windows, bathrooms. So just try to double check truly like where are we with the bedroom bathroom count because that is important because you could have a live loan and the appraisal comes in. So we want to make sure we really know what the true bedroom bath count is in the property. And if we have that, we pull that report. So it's just great, conversation with your realtors on the weekends or at open houses. I mean, you could really be snatching that deal, way ahead of time because you understand and know, what this process, means for you. And with that, as I just said in the last slide, I mean, if you're still a little short, we can add the IO feature to it as well. So you really, between doing the short-term rentals and maybe pairing it, coupling it with the, an IO feature, you should get a lot of production and increase your volume on DSCR for any of you on the phone that are, I mean, on the call that are using that right now. And
Yeah, so again, and we're going to chat about it at the end, but we just think the short-term rentals are such a big play and we give you such an easy tool to calculate it. And I'm going to chat a little bit how you can source more DSCR product. But that's a big one. And then, the last one, even on long-term rentals, we allow for 75% of the 1007 if it's not an active lease. So again, there's just this product, you should be able to find ways to qualify many borrowers with the programs that we have available and that we put at your fingertips. I do want to jump over. I've seen some questions in the chat as well and highlight a little bit. We brought up foreign nationals earlier. We do allow foreign nationals on this product. If we can get to the next slide. And one more. On our foreign nationals, we do require that coverage ratio to be at one or higher. So if we are going to do foreign nationals, we do have a maximum loan amount, but I'll tell you, while our max loan amount's $1 million, the majority of these homes are at because of the down payments or just investors trying to do cash flows. They do have a lower average loan balance than the typical average loan balance. So $1 million is still saying a lot. We do require a 70% LTV or 30% down. Borrowers must pass OFAC screening and provide a valid passport. They do require 12 months reserves. No U.S. credit is required, but must have three credit references or use an international credit report to qualify. We do allow foreign assets, but as you can see here on the screen, the foreign assets always have to be translated into English so we can calculate the amounts. Funds, again, converted just like the translation so we can read it into US dollars so we know the amounts. Borrowers must own a primary residence in their country of residence. Again, this is really just for them to acquire properties. It's not for cash out. And title may not be held in an LLC. We're asking the foreign national to hold it in their name. But again, we see good business here. Just want to make sure that as you go and start soliciting more and more business, that you know you have access to, like we said, foreign nationals, that you can also, do U.S. citizens and permanent residence aliens. Again, we gave you some of the great LTVs that were available. So why don't we kind of wrap up if you haven't been doing this product and talk about how you build your investor business. So one more slide. Um, Here's some ideas if you haven't been playing there. Landlords with multiple properties. There are third-party sites out there that you can reach out to. We'll try to, if you reach out to me personally, be glad to give them to you because there are things like PropStream, Bats Leads, um, CoreLogic. All of these have different information they can give you regarding landlords with multiple properties so you can solicit them for their next loan. Even MLS Tax Suite is available in most markets. So that's one angle you can use. Another one is, and we keep talking about these short-term rentals that Sherry says she's seeing a lot is, Airbnbs and short-term rental hosts. There are third-party sites out there that allow you to tap into these owners. Local short-term rental permits as well are required in a lot of markets. So if you're trying to find buyers on these properties, there's super easy ways to get access to these people so you can find more of this business. And then lastly, LLCs, right? A lot of these people are closing in LLCs. And so if you go to the LLC, your Secretary of State, just start trying to search real estate themed LLC names. Like a lot of people will make funny names, but they'll put the word real estate at the end, or they'll do other things that allow you to identify that they're putting real estate in an LLC. So again, just trying to give you a couple ways when you walk away from this presentation on how you go out there and tap into more clients that may be needing DSCR loans. So I know we're kind of at the top of the half hour. So to close out, I'll just tell you, we believe our non-QM business stands out. We have very open communications. You can call directly our underwriting team. Again, we're experts in non-QM and underwriting, as I shared with you. Jevon's got him and his team has been doing business in this market since like 2018. We do a lot of things on pre-flighting income when you just reach out to your AE and we can get that air DNA pulled for you on your short-term rental. If you have questions, we have a scenario desk you can call. We'll pre-flight those condos to if you're concerned about something that's non-warrantable and whether it will qualify for our non-warrantable condos. But again, we underwrite all of this in-house. We retain our servicing. We use great technology to get things done. So please think about us when doing your next DSCR or any non-QM for that matter. Don't forget, we have crypto. Sherry or Jevon, anything to add before we wrap up?
Nah, sorry, I didn't get to say much from these questions, but I've been firing off, so we had a lot of good questions. So
Any
hopefully,
any
Great.
themes
Yeah.
out there on the questions that we need to call out or no?
Now, a lot of prepayment penalty stuff. I don't know how much we hit on it really, because I was
We
flying
didn't. We
away.
offer a zero, 1, 2, and 3. I always say get a minimum of 1 because the cost for 0 is probably too great.
Yeah, the LLPAs for the prepays can be a little costly. So you know, when you put in your pricing, it doesn't really ask you per year. So you can look at the pricing when you price out any DSCR loan. So that should always be in there. But I would just say, I mean, you know, leaving this, thank you everyone for coming. And just remember, cash out for reserves is across all products. So that is, you know, something that, you know, I feel we we got a lot of
Right.
that business in over here. So there's a
Any
lot.
other themes, Jevin, in there before we wrap up?
Now, that was the kind of the common one that came up a bunch of times. I didn't really
All
answer.
right. Well, again, just want to thank everybody. I saw some comments in there. Yes, we do post this to our portal. It'll take a couple weeks before we get it out. We have a plethora of information from prior webinars as well. So feel free to reach out directly to your AE, email us directly yourself. We appreciate you joining our webinar today, and join us next month again with a focus on investors. We're going to be covering our bank statement programs and look forward to having you join. Thanks, everyone.
Thank you.